Hello everybody, I'm Zach. If you're new to this YouTube channel, today we're gonna be analyzing the DXY as well as the XXX USD pairs. So without further waste of time, let's get straight into it. So those who know how I trade, I normally use the horizontal lines as well as trend lines and the Fibonacci and other tools to basically be able to catch profitable moves from the market. So today I just want us to analyze the DXY and the XXX USD pairs so that we see what we are expecting for the week ahead and probably profit more from the market using this analysis. So we are not trying to lead the market. I want you to understand properly. It doesn't mean that whatever I'm analyzing, the market will just go that exact direction. But what I'm doing is I'm trying to create a bias for my week ahead, basically preparing to know what I'm expecting. So if the market doesn't respect my analysis, I'll obviously adjust my analysis and react to what the market will be doing. So you let the market lead and then you follow. So that's what I'm going to try to do today, and stay with me to the end so you get the most value out of this video. So first of all, I'm gonna start analyzing my crucial points. I'm looking for points where there's basically at least a few bounces. 1 or 2 bounces will be good. Yeah, basically to improve my accuracy. As you can see right over here, there was a bounce here, there was a bounce here, and some sort of bounces also there. So, and I'm on the daily time frame. I normally like to start from the daily time frame to basically get the most accurate analysis, which will hold long term. Remember, the higher the time frame, the more accurate the analysis will be. So we also have this point here, and then this points here. So okay, another bounce here. I hope you see. Here there was this bounce here, this bounce, and then there. Here we have this point here, we have this point here also. So yep, stick with me. Let's do this. There's a reason why I've chosen this point and not the topmost point, but I might consider marking the topmost point as well. So let's just stick with the strategy first and do the first things first. So I might also want to mark this point out because we had some major bounces there, and actually the market fell from this point all the way there. So it was basically some form of resistance. We are basically trying to find support and resistance levels. So let's go to the candlesticks. That was the line chart. From the candlesticks, I'm well aware that I had these this channel. You see, the market was on a bullish momentum, bounced. Okay, there was a touch here, some sort of a bounce here, it bounced here, continued to go up. Then when it broke out, we've had quite a very bearish market for long period of time. So that's also what we are going to be looking at. Personally, if you know, I trade the 90% rule and I follow it religiously. So I'm expecting this DXY market to potentially keep going up until this point. Is when I'll be maybe changing my bias, or if the market comes and breaks this point before getting there, then I might also know that I'm going to probably change my bias, but not even that point exactly, because we still have this major resistance level here. So the market might move any direction here or here, but no, we are targeting these lows. If it buys, maybe we'll be expecting long-term bullish momentum if it breaks that particular high over there. But as it is, there will be some pullbacks and then the impulses, the pullbacks, the impulses up until we get to this point. So yeah, let me just complete this channel so it makes a bit of sense. There's no perfect way of drawing trend lines, but you just try that whatever you are drawing, let it make sense. right? The analysis just has to make sense. It doesn't have to be perfect. I like catering for most touches. So here, here, and then here, those bounces. So that way, let me lock my trend lines to the smaller time frames. And unlock them. Okay. The daily time frame, sorry. Right, so I know that long term I'm expecting the market to keep on pushing down, so I'm going to basically go to the smaller time frames, find my entry patterns. You know, we have those continuation patterns. We have things like the falling wedge, the rising wedge. We have also things like the flags, bearish flag and the bullish flag. So those are also some of the continuation patterns you can pick along the way. Also, we know we shall confluence that analysis using things like the impulse correction phases. So those who know, check out my previous videos. I normally teach how to analyze the market using those impulse correction phases to to actually get right moves most of the time, you know, because the market moves in phases, and those phases can help you get some good moves out of them. So I'm here on the H4 time frame. Let me just mark my recent low here, because this is where we might potentially get a nice channel. So yeah, there, and then I just want to mark out this point here. And then you can see here we had a bounce here. The market bounced again before going back up. Here we had a bounce. See the market, what it did here, see what it did here, also see what it did here. And if we go back, we'll just find more data that will actually tell us that this is a key level, you know. So I want to look at this pattern, what's happening over this point, right? Those are things I want to analyze for today. Basically trying to cater for more touches. So with what I'm seeing right here, right now, I'm seeing some form of a bearish flag. This is just some form of a bearish flag. So whatever I'll be expecting on this particular pair is that, okay, not pair, this is the DXY. I'm expecting to see the market probably either come break out of this channel. Let me use the cross here. I want to see the market break out of this bearish, it's a bullish momentum short term, but forming a bearish flag. So I want to see the market get out of this bullish momentum by breaking out of this trend line. Once it breaks out and closes below the trend line, then I'll be sure that the selling momentum has ensued. So basically that's what I'm gonna be expecting on the DXY for this coming week. Yes, gonna be expecting it to keep on moving down. So with that being said in mind, we know that when the DXY is selling, these other pairs are buying. They do the opposite. DXY and XXX pairs, they move contrary to each other. If one is buying, the other one is most probably selling. So let's go to EURUSD. Let's go to the daily real quick. I think I'll analyze the EURUSD and then leave you to go analyze GBP USD, AUD USD, and NZD USD to just find out what exactly you are expecting the market to do for the week on those particular pairs, because you know I can't give you everything. I have to give you room to practice also using the information I'm teaching you, so as to basically better your skills. already we know that we are going to focus on most probably buy entries. So I'm basically expecting to see the market buy towards what it is, what just happened. Alright, I'm expecting to see this market buy to be stopped here to complete the 90% rule. So I'll go to the H4 time frame to just find more conferences for buys. Let me mark this low here first. I want to understand what's happening at this point. So it's some sort of a key level, but I don't know if the market will just reverse from there exactly, because also the candlestick pattern that you're getting right here is some form of a reversal of candlestick pattern. But let's go to the H4 to simply find the continuation pattern. Where is it leading us? So we will be expecting our entries. So I have this sort of channel right here, not exactly channel, but it's just a correction form of a continuation pattern, because as you can see the market has been on a bullish momentum. It impulsed to the upside, then this is just some form of a correction. So I'm anticipating if there will be a breakout out of this particular trend line, I'll just be watching to see if the market will continue buying. But if it doesn't break out, I'll just stay back and watch what will happen next, because I don't want to find myself in a situation where I'll be forcing my trades. I just want to have a smooth experience trading. If you force a trade, that trade is 9 out of 10 times going to be a loss. So just follow your plan.